Hello and welcome. You are watching News 9. I am Suyash Maheshwari and with me in the studio is my friend and colleague Kartik Malhotra. According to the exit polls released on Saturday, the Bharatiya Janata Party-led NDA is poised to secure a decisive victory, potentially winning around 350 of the 543 seats in Lok Sabha. Some exit polls even suggest that NDA could make history by surpassing the 400-seat mark this time around. The predictions also indicate surprising gains for the NDA in 5 states, including West Bengal, Kerala, Tamil Nadu, Telangana and Odisha. Furthermore, the markets will also react to the better than expected GDP numbers for the March quarter as well as FY24 that were released after the market hours on Friday. With such monumental outcome potentially on the horizon, what does this mean for the stock market? How should you position your trades this week and which sectors will likely to be in the spotlight? To answer these questions and more, we have assembled an elite panel of market experts. Mr. Nilesh Shah, Managing Director at Kotak Mahindra Asset Management Company, Feroze Azeez, Deputy CEO at Anand, Rathi, and independent market expert Mr. Ambareesh Baliga. Kartik, I'll come to you first before we get to our panel. I think as far as the exit polls are concerned, most of us were factoring in a sweeping victory for the incumbent government. But what came as a surprise to me at least was that, these exit polls are also giving edge to NDA in West Bengal over TMC, and they are also expecting a better tally for the BJP this time around in southern states. Even in Odisha, for example, they are expecting BJP to edge the opponents.
Suyash, hi, good morning, and it's good to be here, and I think it's, like you mentioned, it's a fairly monumental occasion, and every 5 years that you see elections, that pretty much sets the tone and sets the mood for the next 5 years to come. Now, while the markets and many of us had factored in the potential of BJP-led NDA government coming back to power, there were supposed to be certain stress areas, which, if the exit polls are to be believed, and that's a big question, should you believe exit polls or not? Because exit polls have surprised in the past, and 20 years back, I think 2004 was the first time in recent history where exit polls were completely wrong, and we really did not see the incumbent BJP government under Atal Bihari Vajpayee coming to power, but we had a change of guard with the Congress-led UPA government coming to power for the first time. But like you mentioned, there are certain, swing states which in the exit polls are now seeming to work in favor of the BJP-led NDA alliance. So I think if exit polls are to be believed, Fir ek baar Modi Sarkar cannot be ruled out. And some exit polls are also going further ahead to suggest that the NDA combined alliance could actually be 400 par.
Could be 400 par, at least that's what the polls are suggesting, the exit polls. Now, Mr. Shah, I'll come to you first. Exit polls, a clear mandate is there that 350 is at least what perhaps NDA government will be able to rake in 2024 general elections. How big an opening can we expect for the market tomorrow? Because I remember back in 2019, after the exit polls, the immediate Monday, after the exit polls came out, Nifty surged about 3.7%. What are your expectations this time around, sir?
So Suresh, first, thank you for having me over here. I believe market will be opening with positive bias, partly because of the GDP number, which came ahead of expectation, and partly also because of exit poll. But as Kartik mentioned, we have to wait for actual results. Second, this is not the time to be a trader and play for exit polls and election. This is time to be an investor where you should be investing in the journey of becoming a Viksit Bharat. As an investor, you are likely to make far more return than trying to time the market as a trader.
All right, and Mr. Baliga, I'll come to you. As Kartik over here was alluding, how much weightage do you actually give these exit polls, considering that about 60 to 65 crore people vote in this country, and the exit polls only samples around 8 to 10 lakh people, which is less than 0.015%, sir. How reliable do you think these predictions are, Mr. Baliga?
No, first of all, if the predictions would have been completely been wrong, I don't think these agencies would have existed. So I think we need to give some weightage for this. Yes, I think the numbers could vary from the ones which have been given out. And again, this time I don't think it was really a question whether NDA would come back or not. I think the question was by what sort of a margin the victory would be. And in the last 1 to 2 weeks, there was a fear that it could be only be a marginal victory, which means NDA would possibly end up at 310, 320, and BJP closer to about 272 plus. But then with the sort of exit polls which have come, which are indicating 350 plus, I think the markets should open gap up on Monday. And in case these are the same numbers which get which in fact get translated into the real results, and they are also 350 plus or maybe 360, 370. I think this rally can continue because this really gives the roadmap for the next 5 years. In the sense, it's at least the roadmap for the next 5 years is decently clear.
Mr. Baliga says the rally could continue and we could see a big gap up opening come Monday. But Feroze, I'll come to you. You know, a lot of analysts and investors that Karthik and I speak to pretty much on a daily basis, including Mr. Baliga over here, had indicated, it will be wise to keep some cash positions in your portfolio in the lead up to the polls. So let's say if you have about 1 lakh rupees to invest in cash right now, how should one deploy their money and what sector should one consider buying into, sir? I know it's not one size fits all, but anything that's a general representation of portfolio allocation.
See, I think of course if somebody has kept some money as cash, liquid cash to get into an election, I personally think that's not going to be more than 10% of one's wealth. The larger question is what to do with the 90. If your asset allocation in the 90 is not great, then this 1 lakh will not do the trick. India has only 3.2% of the total household savings in mutual fund, and in direct equity, individual holding is 3.2% out of the 800 lakh crores. So most people miss the larger picture. So firstly, if you're not going to be invested 60, 70, 80% in equity for your long-term monies over the next 5 years, I think you're being significantly pessimistic for a situation for a country like this. One. So point one, at least 70-80% of your money should be in equity. If it's already 80% in equity, then the 1 lakh again can go into equity as long as it's 5-year plus money. That's point one. Point two, what are the sectors which will do well? Of course, those are usual suspects. Defense, we're going to be spending 6.5, 7 lakh crores on defense. We're going to spend 2.8 lakh crores on railways and railways is 2.5 lakh crores. Road and highways, we are spending about 2.7, 2.8 lakh crores. The kind of infrastructure spending with the tax collection going up, we grew our direct tax collection by 19.7% on a back of 21%. Again, so if these are the kind of tax collections which are going to happening, the infrastructure spending, especially for these sectors which I read out, railways, roads and defense, is going to go up. Now, is that already priced in is the second question. But if you came to mutual fund platform, I don't think the next 5 years needs you to do direct equity at all. Because if things are good, you can use a mutual fund platform. If the broader market is not going to do good, then you have to get into direct equity, buy those 5 stocks and do a lot of research. I think this 5-year era is a mutual fund era. Because direct equity does not, we have so many direct equity clients, they don't beat 20%. We compare them with Nifty on an alpha basis, which brokers don't. Most 92% of them underperform their the mutual fund peers. So point one, have 80% in equity. That's the first piece of recommendation. If you have money sitting outside to deploy it on Monday, of course, the actual elections could throw up a different result. But I think as long as the government continues with 280, 300, whatever that number be, there could be a short-term blip if it's not as expected as 350, 370 as per the exit polls. But I am reasonably clear that the government will be formed, irrespective of whatever the total comes to. So put your money on Monday. That's what I would do. And 3 sectors which I read out. Take 3-4 mutual funds. They'll give you those 16, 17, 18% also for a 5-year holding, because I think Nifty can double in the next 5 years, which is 30,
that's
40%.
a big headline. Nifty will double in the next 5 years is the word coming in from Feroze Azeez.
I mean, that's a CAGR
50,000 levels is what you're looking at then?
50,000 soon, that's what Feroze is predicting. But, Karthik, shifting gears now.
Yeah.
Apart from exit polls that came out, last night, we also had GDP numbers, which simply put were better than expectations, both for the March quarter as well as FY24. Now, this puts us in a Goldilocks sort of a situation, compared to our peers, where inflation is coming off nicely, as well as the GDP and the economy on the whole, as indicated by your GDP numbers again, your PMI numbers, both services and manufacturing numbers. everything is going well for Indian economy, right? Inflation
So,
coming off nicely.
So I think, yeah, Goldilocks is a nice way to put it, because, you know, it's just right. All the parameters, the entire report card tells us that all the parameters are working in favor of India. Now, are they working in favor of India only because of continuity in the center? And is that likely to get impacted in case of the low probability, at least as far as the exit polls are concerned, the low probability of a change of guard or not is something that we'll have to see. But I think let's just try and run through some of these numbers. Look at India's GDP growth rate. So except for 2021, and this, remember, was the COVID year where we had actually seen a dip in GDP coming down to about 5.8%. But largely speaking, Suyash, you look at the 2014 onwards, ever since the BJP government came to power for the first time. In fact, 2014 was still the UPA government's sort of, hangover reflecting in numbers. But we've seen a fairly sizable, decent growth until we saw one dip in 2020. Now, this dip in 2020 cannot be attributed to COVID because we hadn't really seen the impact of COVID hit the economy until the month of March. So maybe a few decimal points could have been impacted in the growth numbers for 2020.
And perhaps that negative figure in 2021 comes
2021
because of that.
was absolutely because of COVID. So then when we saw almost a double-digit growth at 9.7%, that was on the low base effect. But on that high growth of 9.7, we have still been able to grow at 7% the next year and a massive 8.2% this year. So this 8.2% which came on Friday was fairly unexpected by anybody. Even the RBI had not factored that in. But in addition to this, let's also look at the inflation, because, growth, of course, is one part of the Goldilocks, things being good, but then there is also inflation. If you look at inflation, and we've been stuck now for many, many rate cycles at the 6.5% interest rate, but we have seen inflation also taper down slightly. So from the high of July at about 7.4%, and that is when, the impact of the rate hike actually kicked in. So, we've seen 7.4% gradually step down all the way to about 8.7%. A marginal increase in November and December, largely again on account of food inflation, etc., which we saw the impact playing out in the month of November and December. But since then, I think again, Jan onwards, this entire calendar year, we've been stepping down little. So overall, if inflation comes in the vicinity of about 4.5, 4.6% for the whole year, and that data is expected soon, then we should be, as you defined, in that Goldilocks scenario where inflation is working well, growth numbers are coming well. But there is a bigger challenge here, and I believe that bigger challenge is on account of services. So services economy is something which I believe will really need to kickstart, reignite itself and deliver for India's growth to continue.
All right, and we will also have the policy decision from RBI, later this week. So more factors for us to track, what RBI does next, because of course they find themselves in a comfortable situation, unlike the US, where inflation continues to remain a problem, and if they, and economy continues to do well at the same time. So if they do go for a rate cut, economy will continue to get hotter, and that is where good news becomes bad news.
Absolutely.
But we find ourselves in a much better position, and Mr. Shah, let me take this to you. The economy, continues to perform well, and historically, markets tend to stabilize or even perform positively a month or two after the election. So beyond that immediate market reaction that we will see play out this week, what are the key factors, sir, that you will be watching closely after June 4th?
So one, our market trades at a premium valuation to peer group, and that is pricing in 3G of India. One, our earnings growth will be better than peer group. Second, our governance standards will be better than peer group. And third, we will do green transformation of our economy. Sustenance of growth, governance standards which respects minority shareholders and capital, and creating a growth model which is green rather than destroying environment will be three critical things on which investors will continue to evaluate India. And that is where now there is hope that 100-day program will unleash some big bang reforms. So immediately after election results, if they are in line with exit polls, focus will shift on 100-day program, including the budget, as to how do we improve our 3G, earnings growth, governance, and green transformation of Indian economy.
Right, that's a word coming in from Mr. Shah. But Mr. Baliga, I mean, we are expecting, and you have also pointed out that we could potentially see a gap up opening come Monday. But again, drawing parallels with 2019, counting day, we saw a very volatile session for Nifty. Nifty rose as much as 1%, ultimately settled in the red. Do you see profit booking taking place this time around as well after, as we get closer to 4, because pretty much there are 2 days left after the results, after Monday, right?
Yeah, I mean, in fact, by fourth morning, say by about 10:30, 11, I think the trend will be very clear and you know exactly how many seats. So I think this trend can continue for a while longer. I mean, before that correction, because corrections anyway is a part of the market. You'll see a lot of corrections in between. But if you're talking of the longer term story, I think that is intact. So as long-term investors, one should not really worry. And I mean, whenever we have those sharp corrections, I mean, surely your corrections can be sharp based on the news flows. Utilize those corrections to buy in. I think that's the way one should be investing going ahead. Because if you look at all the macro numbers, I mean, you just talked about GDP. You look at the GST flows. I mean, that's been extremely good. Look at the RBI dividend, which was announced recently. I mean, it took everyone by surprise. So deficit would be clearly be under control. So I think, I think the only thing which can derail India are the unknown factors. And when you invest, you really can't account for these unknown factors. I mean, it can happen anytime. But whatever is known, I don't think anything can go wrong with the India story.
All right, and right, Karthik, and we were talking about so many positive factors that investors will, watch out for come Monday, and we'll see that in price action. GST numbers also came out.
That's right.
And 1.73 lakh crore figure for the month of May. But I don't think apart.
It's a rise when you look at it year on year, but
10%
but if you compare it to the number that came out for the month of March, we see a decline sequentially. But
Right.
March, in any case, is a good month for GST collection, as we know.
But apart from all these factors, it seems like FIIs are just not convinced. I mean, they have pulled out close to 1,25,000 crore worth of money from Indian stock markets in the first 5 months of 2024. What do you think explains that, Karthik?
I think Feroze is going to be the best suited here to answer that. But before I let you come back in, Feroze, for our viewers, I just want to run through some more data, and I think that data is also fairly contextual here. If you look at counting day and how exit polls and counting day sort of differ with each other, here's the data on the screen. Nifty 50 on counting day. Let's go back again. 20 years, 2004, when the exit polls had got all the predictions absolutely wrong and were expecting the BJP-led government to come back to the center under Atal Bihari Vajpayee. That did not happen. And see how badly markets crashed. Almost 12.2% decline on counting day. Compare that to 2009, and 2009 till then we had seen the scams of the UPA government come back. But this is 1 year after the financial crisis of 2008, the Lehman Brothers subprime crisis in the US, and with the UPA government coming back to power, markets had reacted positively on counting day, touching the ceiling almost, going as high as 17.7%. Cut to 2014, when markets were expecting the Modi wave, up ki baar Modi Sarkar, markets were expecting that, and that was already factored in, and that led to markets actually on counting day scale up only 1.1%. But cut to 2019, like you mentioned, after the initial buying frenzy, players actually book profits. Now, coming to your question, the FII data, I think that FII data is something that we would love to have Feroze's views on also. FIIs have been on a selling spree at least all of the last 1 month. If you look at the amount of FII inflows into India in all of the last financial year, from 1st April 23 to 31st March this year, we've seen almost 2 lakh crore rupees inflows coming into FIIs. If you just look at this financial year, 1st April to Thursday, which is last Thursday, 29th of May, almost 1/10 of that, 10% of whatever was the inflow for the whole year has already been sold. Now, it's a different story that domestic institutional investors and retail participants are continuing to play the India stock story. But Feroze, how do you read FIIs? Do you think FIIs had become jittery of looking at keeping their money in the Indian markets and had hence tried to book profits? And what happens from now? Are they really going to come back come Monday and definitely counting day onwards?
If you look at headline numbers, now headline numbers generally hide more than they show. If you look at these 30,000 crores of exit, close to 29,000 crores of sale from FIIs, I don't think it is too much, point one. Now, why is it not too much? Because FIIs generally are very cautious. If you look at their index short positions, I have never seen that happen. 55 long, 45 short, one day before, next day you have 87 short. That's basically a hedging position. If you look at their overall long position and then you see these short positions, then you will have them in context. Actually, it's a good news. In the last 3 general elections, on the counting day, DIs have been net sellers. Only FIIs have been buyers, and they have always been a seller before the counting day because they're institutions. They like to not go with opinions. They like to have their hedges. That's point two. If you want to see the exact confidence of FII or superficial investment in India, if that's the debate, the best way to calibrate that or the barometer is what is their exposure in Indian small caps. You would be surprised that in their small cap index, MSCI India small cap index, there are about 465, 67 stocks. Indians in India sitting have only 250 stocks. And if you look at the kind of ownership which they have increased over the last 1.5 years in the small cap space, very well knowing they can't sell it on a day, it's clearly an indicator that they've come into India not with hot money. People bring hot money, they buy the top 10 counters of Nifty because they can sell it within an hour. But if they're going to buy stocks with 10,000 crore market cap with 4,000 crore free float, and if they own 1,500 crores of that free float out of the 4,000, they know very well that this is long-term money. So FII's behavior, if you look at the headline number, may sound negative for this financial year, but I think the deeper numbers show great conviction, especially if you see the change in the small cap ownership and the extent of number of small caps which are there in the MSCI small cap index. I don't think anybody in India tracks that. Ironically, a foreigner has 215 stocks more in their India small cap index than the Indian mutual fund industry does too.
Okay, Feroze, I just want to, want to come back to you. Something very interesting. You mentioned that domestic institutional investors have been net buyers on counting day. How do you explain that? Did you say net buyers or net sellers?
Net sellers.
Net sellers. Okay, so is it fair to assume that they book profits on counting day and then they reinvest on corrections?
No, what I would say is there's a very, very small numbers, but they're net negative. If you look at the counting day of 16 May 2014, there was 349 crores of sale. So point I'm trying to make is domestic guys sell, but those not very significant amounts. But FIIs have been buyers on counting day. That's the more important number and a heavy number. 3,600 crores of buying on 16th May of 2014, 23rd May of 2019, there was 1,439 crores of buying. So FIIs generally go cautious before any uncertainty is the point I'm making. And if they were actually not bullish, they wouldn't add 2,08,000 crores in the previous year. And of course, the domestic institution in the same period have bought 1 lakh crores. And I think this government continuing was very, very critical on one count because India's momentum of Indian retail investing in India and the conviction was just building up in the last 2-3 years post-COVID. If there was a disruption, I think that would have created a dent in the paradigm shift of how India invests money. India invests money in debt. Foreigners invest in India in equity, which is very ironical. Indians have made not more than 7% weighted average return over the last 10 years with their asset allocation. And foreigners make 15-18% investing in India, and Indians invest only 7.5% in their weighted average return.
All right, but shifting gears now, Mr. Shah, I'll come to you because when we were talking about FIIs, Karthik also alluded, whenever there's a major surprise on the counting day, the markets move aggressively. We saw that in 2009, Nifty, fell about 12.2%. In the following year, it rose by about 17.7%. If there is a major surprise on the negative side, we don't perhaps, the question of this mega majority that everyone is factoring in does not happen for the NDA government. What sort of a market movement do you expect, Mr. Shah?
So market always builds a scenario and prices it in. When actual events are different from what is priced by the market, there is an adjustment. If the surprise is positive, the adjustment is upwards. If surprise is negative, the adjustment is downwards. Now, a lot depends upon, traders' positioning. As Feroze was mentioning, there is some amount of short positioning by foreigners. Now, please remember that foreigners have invested reasonably large sum. Their holding is upwards of $750 billion. and their holding in India is probably higher than most emerging markets. They have probably hedged something here and there. So market reaction will be function of how the actual event is vis-a-vis what they have priced in.
Well, I think we are running out of time, so I'll request, all three of you to weigh in on this and, shed the hat of being financial investors and the doyens in the world of markets and wear the hat of the citizen of India, and perhaps if I can also, be adventurous enough to say that maybe don the hat of a psephologist and tell us, maybe, with a thumbs up and the thumbs down, what, according to you, seems to have worked or not worked for the NDA government. Since we are now out of the 7 phases of polling, I think we can now go ahead and take those questions with you. So, if I can have all three of my guests cut in a window here, it'll be interesting to see how they react to the questions I'm going to ask them. So, as I see it, gentlemen, there are 5 M factors in this particular election, right? And these M factors, to my mind, may have been instrumental in deciding on how the voters actually voted. So there are 5 factors, and I will, these are the 5 factors. The number 1 M is the Modi wave. The number 2 M is the Mandir wave. The number 3 is the Mahila wave. The number 4 is the Muslim vote, and the number 5 is middle class. These 5 M's, if I can have you all in the window here and understand from you one by one with thumbs up and thumbs down. Number 1, the Modi factor. Do you think the Modi factor has played a critical role in deciding the way the voters have voted this time? With a thumbs up and thumbs down. Modi wave, number 1 M. Mr. Baliga, I don't see your thumb. All right. So, okay. So, Modi factor is a thumbs up from all 3 market participants here. The Mandir factor. Has the Mandir factor been instrumental in deciding, swinging votes for or against the NDA government? Thumbs up or thumbs down?
Difficult to say.
2 thumbs down and 1 difficult to say. All right. The women voter, Mahila factor. Is the Mahila factor at play in elections this time around? 2 thumbs up. Feroze, Azeez also gives a thumbs up. Okay, so we have the Modi wave, we have the Mahila wave. Muslim vote? Do you think the BJP government has this time alienated the minority communities more than it has in the past? Thumbs down. Muslim vote not. Okay, so neutral by Ambareesh and Feroze and Nilesh are saying that Muslim vote not working in favor of the NDA government. And people like us, people like Suyash and me, gentlemen, the middle class that pays the taxes, have the middle class factored in at all for the NDA government in this election season? Yeah, okay, I want to spend a minute on that. What is in it for the middle class in the elections? Feroze, let me start with you.
See, I think middle class, you can impact middle class by lowering inflation. You can impact middle class by making sure their investments are growing. If you look at the last 10 years, Nifty has done 13.4%. Nifty small cap has done 20%. So how do you impact the middle class? Middle class, you can't give them a 500 rupee swap and for per month and make them richer. You make their investments grow faster.
Okay.
That's one. Second, bring down their inflation. Get housing more affordable. So I think largely inflation and capital markets doing well is what takes care of middle class. Poor people don't have capital to even invest. Middle class has some capital to grow. If you can get their capital to compound at double-digit returns, that's a big thumbs up.
Okay, big thumbs up coming. Well, I think, Feroze, you did not shed your your mutual fund hat while answering that. I'm not sure how much of that middle class which invests in markets has gone out and voted. Well, I think data will tell us. But Mr. Shah, let me come to you. Middle class, you also gave it a thumbs up. What is in it for the middle class with the NDA government coming back, presumably to power?
I think middle class is more optimistic about future. Many have seen their condition improve. Some haven't seen their condition improve as much, but they are optimistic that with Modi Sarkar, their future will continue to improve.
Okay, Mr. Baliga, your view on the middle class before we wrap it up with you.
15 crore demat accounts, and most of those demat accounts would be with the middle class, and the amount of wealth which has been created possibly in the last 2 to 3 years. I don't think the middle class has seen that sort of wealth ever in the past. And that clearly shows in the sale of automobiles, the real estate, and white goods. So, middle class clearly is happy that they are able to enjoy this wealth now and would have surely, voted for the NDA.
All right, Karthik, I think that's the perfect note to end, this show on. And Feroze, Azeez, Nilesh, Ambareesh, Baliga and Karthik, gentlemen, thank you for giving us time here on News 9. So great insights from you all.
Thanks, Yash.
But you out there, just don't leave yet. We have more coming on just after the break.